There's no excitement quite like the moment before a trade. The chart aligns, the setup looks perfect, and your pulse begins to quicken. You feel it in your chest, the anticipation that maybe, just maybe, this is the one that'll change your week, your month, or even your year. But that same feeling, that same excitement, is often the very reason traders lose money. See, most people come into the market thinking that trading is about finding a secret formula. They want a shortcut. They want certainty. They think that a high probability setup means guaranteed success. It doesn't. It means patience. It means discipline. It means waiting until everything lines up and then having the courage to strike without hesitation, and the humility to cut when you're wrong. In my years of trading, I learned that there are two kinds of traders, those who seek excitement and those who seek profit. You cannot be both. When I began, I was young, hungry, and reckless. I made my first fortune by following the tape, watching the flow of prices on the ticker, and learning to read the rhythm of the market. But every fortune I made, I later lost, not because the market changed, but because I did. My discipline slipped. I began to think I could outsmart the market. That's when I learned the truth. The market punishes arrogance. A high probability setup is not about having a crystal ball. It's about putting the odds in your favor. It's the same as poker. You can't control the cards, but you can control how you play your hand. When you trade with patience, preparation, and precision, you don't need to win every trade. You only need to win big when you're right and lose small when you're wrong. Let me tell you something most traders don't want to hear. The best trades often look boring. They're not the ones that make your heart race. They're the ones that make logical sense. When I see a setup that aligns with the dominant trend, supported by strong accumulation or distribution, and confirmed by volume and structure, that's when I know the odds are tilting in my favor. But it's not the setup that makes the money. It's the trader's reaction to it. I've seen men ruin themselves by trading setups they didn't truly understand. They saw someone else make money on a similar pattern and thought they could replicate it. But they didn't know the context. They didn't understand the behavior behind the move. That's where most traders fail. The market isn't about patterns. It's about people. Every bar on the chart represents fear and greed. Every spike in volume is human emotion in motion. If you can learn to read that, you'll see beyond the noise. Now, what makes a setup truly high probability? It's not the pattern alone, it's the story it tells. Let me give you an example. When a stock breaks out of a long consolidation after months of quiet trading, and it does so on expanding volume, it tells me that strong hands, smart money have been accumulating quietly and are now ready to move. But when a stock makes a sudden breakout after a wild run-up, with volume spiking to extremes, that's often the final burst of enthusiasm before a reversal. Both may look like breakouts, but they're worlds apart in probability. The key is alignment. Price, volume, and time, these three must work together. The greatest trades happen when all three confirm the same story. A high probability trade is one where the technical structure matches the psychological environment. It's when the majority are fearful to buy, but the evidence whispers that accumulation is taking place. It's when the chart is clean, the trend is intact, and the pullback invites you, but only if you've learned to wait for the right trigger. I used to sit for days, even weeks, waiting for the right setup. People around me would trade every flicker, every tick, chasing noise. I watched them burn themselves out. They couldn't sit still. But in trading, the hardest work is often waiting. The moment you truly learn it, your results will change. When I speak of mastering the market, I don't mean controlling it. You can't control the market. You can only control yourself. The market will always do what it wants. It doesn't care about your opinion, your analysis, or your needs. It only moves according to the laws of supply and demand, and those laws are driven by crowd psychology. If you can learn to trade against the weaknesses of human nature, your own and others, you'll have an edge that no indicator can give you. There were times when I thought I had it all figured out. I would take a few winning trades, build my confidence, and then overtrade. That's when the market would humble me. One of the greatest lessons I ever learned was this: you don't need to trade often to make money. You only need to trade right. High probability setups are rare, and that's what makes them valuable. If you're trading every day, trying to force opportunities, you're not being a trader, you're being an addict. When you see a perfect setup, your job is to execute without hesitation. But if the setup isn't there, your job is to sit on your hands. Many traders fail because they confuse activity with productivity. The professional knows that inactivity can be more profitable than action. When I wasn't trading, I was studying, watching, waiting, because every great move begins in silence. A high probability setup is one that meets your conditions, not someone else's. It's built on your own tested principles, your risk tolerance, your style. That's why you must have rules. Without rules, emotions take over, and emotions, in trading, are fatal. Let me give you my personal rule, one that saved me many times. Never average a losing position. That single rule separates professionals from amateurs. The moment you add to a losing trade, you've stopped trading probabilities and started gambling on hope. The best traders don't hope. They plan. They cut losses short and let winners run. That's the formula. Simple to say, hard to do. The beauty of the market is that it tests your character every day. It'll expose your impatience, your greed, your ego. If you're not constantly working to master yourself, you'll never master your trading setups. Discipline is the bridge between potential and profit. I remember a particular campaign that taught me more about patience than anything else. The market was showing signs of a major accumulation phase. The tape was quiet, volume was dry, and prices were creeping higher, inch by inch. Most traders ignored it. They wanted fireworks. But I saw something different. I saw footprints of accumulation, large interests quietly building their positions. Weeks later, the breakout came. Those who waited made fortunes. Those who chased noise missed it. That's the essence of a high probability setup. It rewards patience, not prediction. Now let's talk about confirmation, the word most traders misunderstand. Confirmation doesn't mean waiting until the move is obvious. It means having evidence that the underlying conditions support your thesis. When volume confirms direction, when the market structure aligns, and when your risk is clearly defined, that's confirmation. You don't wait for the crowd to agree. You wait for the market to give you permission. Here's something I wish every modern trader understood. You don't need 10 indicators to find great trades. The more clutter you have, the more confused you become. The best setups are clean, simple, and visible to the trained eye. Trading is not about predicting the next tick, it's about positioning yourself for when the big move comes. If your setup has strong structure, logical entry, and clear exit, you've already done 90% of the work. The remaining 10% is psychological. That's where most fail. Because once you're in a trade, emotions cloud judgment. You start seeing ghosts in the chart, you question your plan. You want to take profits too early or hold losses too long. The only way to win is to trust your system, not your feelings. Every time you break your rules, you weaken your confidence. Every time you follow them, even if the trade loses, you strengthen your discipline. And in this game, discipline is everything. There were days I'd watch a setup form perfectly, a beautiful base, rising volume, tight range. Then one day it would break out, and I'd hesitate. Fear would whisper, "What if it fails?" And sometimes it did fail, but other times it would run for weeks without me. That pain of missing a move you anticipated, it's sharper than a losing trade. But it taught me something vital. The market rewards decisiveness. When your plan says go, you go. Not because you're certain, but because you've prepared. That's what separates a professional from a gambler preparation. You prepare for every scenario before the trade, not during it. You know your entry, your exit, and your stop. You define your risk in advance. Because once you're in the trade, thinking is your enemy. The market is a battlefield. Those who hesitate lose. Those who act without preparation perish. The survivors are those who wait with discipline, act with precision, and adapt without emotion. I've seen men ruin themselves because they thought trading was about predicting what happens next. It's not. It's about reacting correctly to what is happening now. You don't trade your opinions, you trade the market's behavior. And the market always tells the truth, even when traders don't want to hear it. When I look back on my career, the biggest profits came not from brilliance, but from patience, waiting for high probability setups, letting them develop, acting when the odds aligned. That's the foundation of mastery. The market rewards those who think in probabilities, not certainties. Every time you enter a trade, you're making a calculated bet based on incomplete information. The best you can do is to ensure the odds favor you, but even then, anything can happen. That's why risk management isn't optional. It's survival. You can have the most beautiful setup in the world, but if you risk too much on one trade, you're done. I've seen traders with perfect analysis go broke because they didn't respect risk. The secret is to always live to fight another day. No trader, no matter how skilled, wins all the time. The professionals know that. The amateurs refuse to accept it. That's why the amateurs lose. When I took a loss, I didn't take it personally. I saw it as the cost of doing business, like a store paying rent necessary for operation. The loss itself wasn't the enemy. The refusal to accept it was. That's what separates traders who last from those who vanish. You must always remember the goal of trading is not to be right. The goal is to make money. You can be wrong half the time and still grow rich if you manage your losses and let your winners compound. The market is a weighing machine for your discipline. Every undisciplined trade tips the scale against you. Now, let's talk about something most traders ignore: context. You can't judge a setup in isolation. A pattern that works beautifully in a trending market can destroy you in a choppy one. A breakout in a strong bull phase might run for weeks. The same breakout in a sideways range might reverse instantly. That's why the first step to identifying a high probability trade is reading the overall condition of the market. When the market is trending, your focus should be on pullbacks and continuation setups. When it's range bound, your focus shifts to mean reversion or breakout failures. Your strategy must adapt to the rhythm of the market, not the other way around. Most traders lose because they try to impose their will on the market. They want the market to give them what they expect. But the market doesn't obey your expectations. The professionals learn to align themselves with what is, not what should be. A high probability setup is born when structure, psychology, and timing intersect. It's when the market is ready to move, the crowd is caught offside, and your risk is clearly defined. But you must train your eyes to see it. That takes screen time. There's no substitute for observation. The market leaves clues, small, subtle footprints if you know where to look. Watch how price reacts to key levels. Observe volume on up days versus down days. Study how quickly reversals occur. These are the fingerprints of accumulation and distribution. I made fortunes not by predicting the future, but by recognizing when the balance of power shifted. When demand started overpowering supply, I bought. When supply started overpowering demand, I sold. Simple principles, but only if you can control yourself long enough to follow them. The crowd never learns this. The crowd trades emotions, not evidence. They buy because prices are rising, not because value exists. They sell because they're scared, not because the trend has reversed. That's why the greatest opportunities arise when the crowd is at its most emotional. When everyone else is fearful and you can keep your head clear, that's when the odds tilt sharply in your favor. High probability trading isn't about being smarter, it's about being calmer. Patience isn't passive, it's preparation. When you wait for your setup, you're doing active work. You're sharpening your weapon. Every moment you don't trade is a decision to preserve capital until the right moment appears. One of my favorite sayings has always been, "It was never my thinking that made me money. It was always my sitting." Sitting waiting for the market to confirm your thesis, for the pattern to mature, for the odds to align. When the move finally begins, the money flows not to the thinker, but to the sitter, the one who had the patience to wait for the perfect shot. You see, a high probability setup is not only a pattern, it's a mindset. It's a refusal to act out of boredom or fear. Most traders can identify good setups. Few can wait for them. Trading will test your endurance. You'll sit through long periods where nothing happens. You'll question your process. You'll feel the urge to act, just to feel alive. But the professionals understand boredom is part of the job. The amateurs can't stand still, so they trade garbage setups and lose their discipline. When I was younger, I made that mistake countless times. I thought trading more meant earning more. I was wrong. It wasn't until I learned to stay flat when the market was uncertain that my equity curve began to rise. Let's talk about execution, the moment of truth. A perfect setup means nothing if you can't execute cleanly. When your plan says enter, you enter. No hesitation, no second guessing. When your stop is hit, you exit. No negotiation, no just a little more room. Trading success is built on thousands of small, boring acts of discipline. Each trade must be treated as a business transaction. Your emotions have no seat at the table. If you lose, you move on. You don't chase. You don't revenge trade. You document what happened, learn the lesson, and prepare for the next opportunity. Every mistake repeated is a habit forming against you. Every mistake corrected is a habit building your edge. Here's another principle I learned from experience. Your best trades rarely feel comfortable. When I bought into weakness or sold into strength, it felt wrong. But those were often the trades that worked. Because by the time a setup feels safe, it's usually too late. The high probability trader acts when conditions are optimal, not when emotions are comfortable. The market rewards courage backed by evidence, not hope backed by feelings. Now let's talk about scaling and pyramiding, the art of building positions. When a trade moves in your favor, and the setup continues to confirm your thesis, that's when you can add intelligently. But you never add to a losing trade. You add only when the market proves you right. You must learn to make the market pay you for being correct, not pay the market for being wrong. That's how fortunes are built, one high-probability trade compounded through discipline and correct position sizing. Many traders sabotage themselves because they think in terms of single trades instead of series of trades. A single loss doesn't matter if your process is sound. A single win doesn't make you a genius. It's the accumulation of disciplined actions over hundreds of trades that determines your fate. That's why you must always focus on process over outcome. The outcome is random. The process is within your control. If your setups are consistent, your risk is defined, and your discipline is intact, your results will follow over time. You cannot shortcut experience. You can read every book, attend every seminar, and follow every guru. But until you've lived through your own cycles of loss and recovery, you won't truly understand. Markets change. Technology changes. But human nature doesn't. The same emotions that drove traders in my era still drive them today. Fear, greed, hope, regret. Learn to see those emotions not in others, but in yourself. When you recognize fear in your own behavior, pause. When you feel greed whispering, hold a little longer. Tighten your stop. When you feel the rush of confidence after a winning streak, reduce your position size. That's how you stay alive. Survival precedes success, always. If you want to master high-probability trading, you must first master risk, and if you want to master risk, you must master yourself. The traders who last decades in this game are not the ones who make the biggest wins. They're the ones who avoid catastrophic losses. One bad trade shouldn't ruin your career. If it can, you're risking too much. Never forget, capital is your oxygen. Run out of it, and it doesn't matter how brilliant your next setup is. There's a rhythm to the market, expansion and contraction, accumulation and distribution, fear and greed. When you align with that rhythm, trading becomes less of a battle and more of a dance. You don't force it, you flow with it. That's how you spot the true high-probability setups. They feel natural within the context of the market's rhythm. They're not forced, not chased, not random. They appear after periods of balance, signaling the next imbalance. And when you see it, truly see it, you act without hesitation, because your preparation makes the decision for you. Trading, at its core, is simple but not easy. The simplicity lies in the principles. The difficulty lies in the discipline. If you follow trends, follow them faithfully. If you fade extremes, fade them precisely. But whatever your method, trade it with consistency. Consistency is the heartbeat of mastery. Without it, you'll forever chase the next holy grail, switching systems, changing indicators, blaming the market. But the truth is, the edge isn't in the market, it's in the trader. The high probability setup is only as good as the mindset that executes it. It demands patience when others panic, clarity when others are confused, and conviction when others hesitate. In my time, I saw traders rise and fall like the tide. The ones who endured had one thing in common: emotional control. They respected the market as something larger than themselves. They treated every trade as a calculated risk, not a gamble. They built their confidence through discipline, not luck. When you reach that level, when you can watch your position move against you and still remain calm, that's when you've truly grown as a trader. Because then, every decision you make is based on logic, not emotion. Every setup you take is filtered through patience, not impulse. And that's the key to building wealth in the market, not overnight, but over time. It's not the flash of brilliance that makes a trader great. It's the steady hand, the quiet confidence, the unshakable faith in process. The market tests you every day, asking the same question: will you remain disciplined today? Most traders answer no and pay the price. But if you can answer yes, day after day, through wins and losses alike, then slowly, almost imperceptibly, the market begins to reward you. Not because it favors you, but because you've earned it. In the end, mastery of trading isn't about predicting the next move. It's about mastering the probabilities, managing the risk, and above all, mastering yourself. The market will always tempt you, test you, and try to break you. But the trader who keeps his discipline through it all, that's the one who survives. And in this business, survival is victory.